Everyone again. We just survived the crash of the live stream for like 10 minutes. And we are back. So, Amber, we were talking about the crypto regulations in Canada. So
Yes.
let's do it finally.
Perfect. I'm going to let Rodney kick us off with some hefty disclaimers because we wouldn't be compliance geeks without disclaimers.
It's true. It's so true. Just so everybody knows, we are not lawyers, and what we are talking about is not to be considered legal advice. We do not represent any governments, so this is not to be considered the official opinion of any government body, country, municipality, whatever. This talk will be about virtual currencies. This is not specific to securities. That is different. They use the same legislation, but there are different applications. So this is specific to virtual currencies. If you would like to see something specific to securities, we do have a red line on our website that you can check out. And this presentation is available to whoever wants to use it. If you take this and present it to someone else and you want to attribute us, awesome. If you don't, we're not going to send an army of lawyers after you saying, that's ours. So feel free to use it however you feel.
We will be able to edit to in the video description so anyone can...
Absolutely.
Absolutely, yeah. If you want to add a link to it, that's fine as well. I just want to start off with the wall of acronyms that is generally compliance. And I'm not going to go through each of them. I'm just going to leave them up there for a second. The sort of core ones that we're going to touch on are going to be FINTRAC, so the Financial Transactions and Reports Analysis Center of Canada, which is a mouthful, which is why I'm just going to say FINTRAC when we talk about it. That's our regulator in Canada from an anti-money laundering perspective. They're also our financial intelligence unit, and that means that they share intelligence with other financial intelligence units and with law enforcement agencies. When I refer to the law or the act, I'm going to be referring to the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, the 5 regulations that come with it, and the additional guidance that FINTRAC issues around that. To set the stage, in terms of money laundering and terrorist financing, they're relatively straightforward concepts. So in money laundering, you have a crime that takes place. So someone has done something, it's illegal, they've profited from it, be that human trafficking, arms dealing. Those guys that we hear outside haven't caught up with them yet. And so they're trying to move their money through the financial system.
So can I clarify a little bit? So
Sure.
I was thinking about what is money laundering. So normally it came from, I don't know, 100 years ago when criminals from when they were getting proceeds from their criminal activity, they needed to legally insert this money into the banking system somehow. So they would set up a laundromat.
Yeah, cash-intensive businesses.
Yeah, and they would claim this as a profit, pay taxes, and
Still happens. Bars, restaurants, strip clubs, anything where you would have a lot of cash going through the system is an attractive business for money laundering.
So, and when we say money laundering, is it always from the criminal activity, and you need to clean the money and insert
And make it
into
look legitimate. Yeah, that's exactly it. So money laundering is always starting with a crime, and the money is moving through the system in ways that are intended to make it difficult to detect, difficult to follow the trail. So sometimes you have money that's moving from bank to bank, from country to country, and especially when you're moving from country to country, it's harder for law enforcement to follow that. Terrorist financing, on the other hand, involves any money that's moving in order to support a terrorist activity. And so while you have similar movements through the financial system, terrorist financing doesn't necessarily start with a crime. You can have people that are just going to their job that are donating to a terrorist organization. We've actually had cases in Canada where there were things that were registered as legitimate charities, and it wasn't even clear whether the people that were donating understood where the money was going. They may have thought the money was going to buy food or to do different types of aid activities when it was really going to buy bazookas and weapons. So in terrorist financing, the money is still moving through the system in a way that aims to make it difficult to figure out what's happening. But in money laundering, you start with a crime. In terrorist financing, you end with a crime. When you start talking about what financial institutions need to do in terms of looking for suspicious activity, you don't necessarily need to know what exactly is happening. So you don't need to know what the underlying crime is. You don't need to know what terrorist activity is being supported. You have to look at it and know, okay, there's reasonable grounds for me to think that this is suspicious. And if I think that there's, the facts and context and indicators are enough for me to say, yeah, a reasonable person would look at this and be suspicious, then you have to do something if you're a regulated entity.
All right.
To cover something that is typically misunderstood. This is an excerpt from the updates themselves, and it says that the idea behind this update with wrapping virtual currency into the existing legislation is to cover like people, businesses that are doing business in like dealing in virtual currency. It is not specific to me buying Bitcoin from another person. It's really in a business sense. So there has to be a business practice going on for this to be considered regulated activity.
Yeah, and this is really the same in the fiat world. So if I've gone to the States last week and I come back, and you know that I have some American dollars because I've just come back, and you're like, hey, Amber, I'm going to New York next week. Do you have some extra American dollars I could trade for Canadian dollars? Peer-to-peer activity in cash. We're not regulated for that. We can do that. But if I come back and I hang out a shingle that says, hey, I'm selling US dollars now, then I become a money service business. So it's the same type of idea. If you know that I have some Bitcoin and that I want to sell and you happen to want to buy it, that's fine. That's peer-to-peer activity. But as soon as I'm advertising, as soon as my business becomes selling Bitcoin or buying Bitcoin or trading Bitcoin, that's a business activity. So that's a different story. There is some nuance in terms of when something becomes a business. But really, when you think about it, as soon as you're hanging out a shingle and advertising, this is what we're doing, you're most probably covered. I have a hard time seeing a situation where that isn't covered. There are a couple important dates when we talk about these changes. So there was a really little change that came into effect immediately when the legislation was public, and that was a movement from the word original, when we refer to the documents that we use to identify someone, to the word authentic. And the way that original was interpreted was that, let's say I was using my cell phone bill. So if I have a cell phone with Bell, and that was part of what I was submitting to you so that I could be identified, if I received that bill on paper, original meant that I have to give you that original piece of paper that I received. So it couldn't be a scan, it couldn't be a photocopy, it couldn't be anything else. And that was problematic. Now, if you received something electronically as a PDF, you could send it as a PDF, that was fine. But if it wasn't that originally, then you couldn't make it into a PDF. So what authentic is saying is that you can use a scan or a copy of something as long as the recipient of that believes that it's the genuine article. So it's authentically a Bell phone bill. It's not something that I drew in pencil crayon and colored in and hoped that you would accept.
So this is really nerdy stuff you're talking about right now.
Super nerdy stuff. Super nerdy stuff. And it's a weirdly minor thing, but it's a big deal, especially for anyone who's doing business online. Because when we start to go into what you have to do if you're a regulated business, you have to identify your customers. And not identify them in a way that you make up, that you think makes sense from a risk-based perspective, but you have to identify them using very prescriptive methods under certain circumstances. So you have to follow, here's the ways that you can identify someone, pick one and use it, and be able to prove to your regulator, FINTRAC, that that's how you identified someone. So while this really nerdy little change in wording seems like a small thing, it's huge for online ID. And I think it was a big cause for celebration. There were a lot of companies that specialized in identification over the last couple of years that actually didn't do identification in Canada. So we would talk to them and they're like, oh yeah, we do AML identification. Can you do it for Canada? Well, no. But we can do the US and we can do all of Europe. And so this is nice because a lot of those companies are now serving Canada. So we have more options, which is great. June 1st, 2020, we're going to have dealers in virtual currency. So on that last slide, Rodney was talking about if your business is dealing virtual currency, then you're going to be covered as a money service business. And that means you'll need to register with FINTRAC. You'll need to have an anti-money laundering compliance program in place. And we'll talk about exactly what that means. And then there are some other pieces to that are going to come into force in June of 2021. Yes?
Could you grab the mic, please? First, yeah.
When we talk about original and authentic, because this is huge. I mean,
for ID, yeah.
Yeah, and but the thing is, in Canada right now, digital signature, which could go with PDFs and any file, is actually legit for a long time, only for the CRA. Did they change that, or because the only federal entity that does not accept digital signatures until now is the CRA. So once you do that and authenticate and prepare your taxes for your business or for your personal, does that count as authentic for them? The digital.
So CRA isn't regulated under this particular legislation. I'm not sure of the answer on that one, but I will put you in touch with someone who can give you the answer to it.
Okay, because it ties up to your income if you're doing. Right now, what I've heard is like recently, the CRA has put out some regulations on getting like if they consider Bitcoin or cryptocurrency as an asset, so you would have to pay taxes over that. But I couldn't understand how could they take things from something that's totally digital and they don't accept digital signatures or digital approvals. So it didn't make a lot of sense. Like, I mean, like this is great, but I still have that gap. If you could help in the future.
That's fair, and I don't have an answer for you on that. But I've got a guy, and I will put you in touch with him that I think would be able to give more of a comprehensive answer on from CRA's perspective what they can and can't accept and what
This
that
is probably authentic and original is referring to a particular
documents
part
that you
in the
use for
document,
ID.
yeah. So
Yeah.
That document could be an invoice.
Yeah. There's a number of different things that you can use in this context. One of the things that I think is kind of fun in a nerdy way that happened in this legislation is that we had some new definitions that were introduced. So we have definitions for fiat currency, which I thought was pretty fantastic, and that was talking about that being different from virtual currency. Now, one of the things that I think is kind of fun when they talk about fiat currency is that they're talking about this is that it's always something that's designated as legal tender by a country. And that's issued by a country or central bank. And so when we talk about fiat currency in this context, it's that very narrow definition, whereas virtual currency is a little bit more broad than that. One of the important parts, so the second piece under virtual currency, they talk about a private key. And there was a lot of discussion in consultations about what it meant to have a private key. And I think that they did a good job in this because they talk about a private key of a cryptographic system that enables a person or entity to have access. So what that means is, if Alex gives me his password protected Trezor with all of the security enabled, and I put it in my safe, I don't really have access to his private key. I'm not enabled to do any type of transaction, so I don't really have access to that, right? I just have the physical device. Sure, there's a private key attached to it, but I can't actually transact unless I have more than that. And so while this is intended to capture some custodial services, it's really not meant to capture the storage of devices and things like that on folks, on behalf of other people.
can I ask a question? So I
Sure.
actually I read the definitions, and it was interesting that virtual currency is actually there are two definitions: the digital representation of value, and the private key that gives you access to that digital representation. Like it doesn't really make a lot of sense to me. So the virtual currency is Bitcoin and the private key. Can be, I mean, that's confusing.
In terms of so the private key piece, I think, is there. So it talks about what virtual currency is. But there's also the concept that I think that any Bitcoiner would say, not your keys, not your coins. So if you have possession of that key, do you have possession of the coins? And that's what they were intending to say there, was that really if you have something that's custodial, where there is access to keys, then that's something that they meant to capture.
Yeah, so if I had Bitcoin, but it was sitting on CoinSquare, and in order to pay something or just to say that I have it for investment purposes, which it says, that would be considered like having virtual currency, even though I don't technically have private keys.
Yeah, so that's the or of that piece,
Yeah.
that it can be either of those things.
Okay, so it still is, if you have dollars in the safe, so dollars are the money, and the key from the safe is also the money.
When I have dollars in a bank, it's the same thing, right? For legal purposes, those are considered dollars that I have, even though I don't physically possess them.
Yeah, okay. So,
But I think it's meant to capture that in the same way, and you're right, it's not always perfectly analogous. I think that I went too far. There we go. So virtual currency exchange transactions and what they're meant to capture. Early on, what was talked about was the idea of on-off ramps. So the idea of really just capturing fiat to crypto or crypto to fiat. So dollars to Bitcoin, Bitcoin to dollars. That changed. It changed in what the Financial Action Task Force published, and that's definitely reflected in Canadian legislation. So it also captures crypto to crypto exchanges. So if you're exchanging between Bitcoin and Ethereum, Bitcoin and Tether, those are still captured as virtual currency exchange transactions. When I think about why that's the case, when I think about anti-money laundering and risk, when they first started talking about the on-off ramps, so just the fiat to crypto and crypto to fiat, we didn't have ICOs that raised millions of dollars through Bitcoin and Ethereum alone. We didn't have stable coins. And so there weren't these facilities that allowed really the transfer of millions of dollars in value in the same way as we have today. So that original guidance that the FATF published was 2014 or 2015, and the world has changed since then. So in terms of risk management, I do think that it makes sense for regulators to look at exchanges between that are crypto to crypto exchanges.
but also I can imagine if Bitcoin is transparent, so you can track all the transactions until they enter the exchange, change to a different currency, and then you don't know which currency and where it goes.
But the exchange knows.
Yeah,
And
but unless if they're not regulated, then they
Yeah.
don't have to comply.
so the Financial Action Task Force published guidance this year, and that guidance was for virtual asset service providers, exchanges in essence, but also brokerages and other different models that would deal in these virtual assets. And that guidance was published in June of 2019, very shortly after the G20 met, and all of the G20 countries said that they would start implementing this within the next year. I think that it becomes very, very difficult not to have some form of this regulation within the near term. So you are going to see some areas that will remain unregulated for longer, but they'll become few and far between.
So Binance is not going to operate in Canada without KYC.
We'll see. I think it would be very risky to do so, and I think that with companies that have taken the position that they're not doing some of these things, they're being relatively selective about the jurisdictions that they're approaching. You're also starting to see them approach jurisdictions with subsidiary companies that are set up to operate in those jurisdictions. So we've seen companies that said, we're not operating in the US and have pulled back from the US, and then they launch a US subsidiary that's doing everything that they need to do to be compliant in the US.
Well, that's what Binance doing right now.
Yeah, exactly. So I think that you might see something similar in that regard.
Which is kind of an interesting segue into the next slide. Up until now, or up until, when this comes into full effect of June of 2021, you had to have what was a substantial connection to Canada, and that being a bank account, a location, or a server in Canada. And if you had one of those things, you were considered like a money services business under Canadian legislation, serving Canadian customers. That was written long ago, long enough ago that the digital age that we're in now, with everybody kind of able to transact online with everyone else, wasn't really considered as much. So now the foreign MSB is going to be, it's part of the updated legislation that says if you were targeting Canadian customers, so if you're actively seeking out Canadian clients in Canada, then you would be considered a money services business, even if you don't have a location, don't have any agents here, don't have a server here, don't have a bank account here, then you would still be considered a foreign MSB. So this gets interesting into kind of back to your Binance question of would Binance be considered a foreign MSB? And that depends, like, where it's kind of come down to is how they target their market. So if they're, if you see Binance ads popping up on YouTube every time you log in and stuff like that, then they're targeting Canadian clients. However, Binance is a fairly big company and fairly well known at this point, so you may not have to actually target Canadian clients, but we haven't seen any
interesting
guidance
in terms of how they do that.
Yeah.
Do they have to block the IPs from Canada in order not to?
No, so the idea here is that if there's a website and I just stumbled upon it, so if I found out about it, decided to use it, they don't necessarily need to comply with Canadian law just because I'm a Canadian. But once they start targeting Canadian customers, that's a different story. So it's not intended to capture everything that might deal with a Canadian customer at some point in its business journey, if you will. But it's meant to capture, if you're targeting your services to Canadians, if you're actively looking for Canadian customers, then the expectation is that you will follow Canadian regulation.
That makes sense.
In terms of what MSBs have to do, so this is the same thing that money service businesses that deal in fiat today have to do. So there's a registration that happens with FinTrack. This is a really easy registration process, and I can't stress this enough. Please don't pay someone a bunch of money to do your registration for you. It's a form. It is free to fill out. There's a pre-registration form where you give them some basic information, and then you just need to know things like who owns your company, what kind of volumes are you going to do, who is your compliance officer. It's not overly complex. And this is one of the few things that when people ask us, hey, can we pay you to do this for you? I will always send them the links and say, please just look at the registration first and what it entails, and tell me if you really think you will need my help filling out this form, because you probably don't. It's not a compliance quiz, right? If you own a business, you know the answers to those questions for your business. I don't. And it's a really simple, straightforward process of being registered. As part of that, once you're a regulated entity, you need to have a compliance officer. So that's a person who's responsible for compliance within your organization. They don't have to be a lawyer. They don't have to have any special designation. They have to be willing to understand Canadian law. So they have to know what it is that you have to do from an anti-money laundering perspective. And they have to have good access to your senior management. So for instance, you can't take your newest, most junior customer service rep in a big company and say, congratulations, you're the compliance officer. Because if something goes off the rails from a compliance perspective, that has to be a person that's going to go to you as the CEO and say, hey, something's happening, we need to make an update, we need to make a change to our program, we need to collect different KYC. And if they're not someone who has good access to your board and management, then that's a problem. So
if it's a one-man company, like an OTC, so it can be like the CEO and the compliance officer in one.
Yes.
And the one, yeah.
Yeah. So if it's a small, and that's not uncommon for small companies and startups, and for people that are taking on that type of role, you have to be willing to learn this and to keep up to date with it, and that's really it. You have a question?
Yes, thank you. If a Canadian startup, is going to sell, for example, T-shirts, accepting crypto, T-shirts, hats, coffee mugs, backpacks,
Mm-hmm.
but the fulfillment company is in USA. The startup doesn't have any allocation, something online, it's a website.
Right.
If you go to our website, you buy $20, we pay 15 to the people, like 10 and 5 for the delivery, and we make $5. But we accept Bitcoin and Ethereum. Does this startup have to register with FinTrack?
No. And if all you're doing is accepting payment in crypto, then you don't have to register with FinTrack.
Sweet.
So for me as a consultant, when I get paid in Bitcoin, that doesn't mean that I have to register with FinTrack. Now, the place where this gets interesting is when you decide to sell Bitcoin, right? So if you're looking at it and saying, I want to get paid in Bitcoin, but I don't want to have to deal with regulation. I don't want to become a regulated entity. Don't then turn around and advertise, hey, now I'm selling Bitcoin for fiat, because my landlord only accepts fiat. Do your sale to an exchange, right? Become the client of an exchange, a brokerage, another regulated company, and be on the client side of that transaction, and then you don't become a regulated entity. The risk of becoming a regulated entity isn't because you're accepting Bitcoin as payment for another service. That's fine. So if you're accepting payment in crypto, you're not a regulated entity, and this wasn't meant to apply to you.
Perfect, thank you.
No problem.
Yeah, there's very prescriptive things that would consider you a traditional MSB, which is remittance transactions, foreign exchange transactions, cashing and selling monetary instruments, and then the virtual currency transactions kind of leads into her saying, like, don't turn around and sell it. You won't be regulated as a t-shirt company.
Yeah.
Other things that you need to do, so you have to have policies and procedures. And a policy is just a document that says, here's what we have to do from a legal perspective. A procedure talks about how you do it. Those should be accurate in terms of what you actually do. So I always find that those have to evolve over time. And the best people to write your procedures and to help you update your procedures are the people who are actually doing those things. I can write you beautifully written policies and procedures, but if those aren't the things you're actually doing, they're not particularly useful to you.
To that same point, if somebody tries to sell you your policies and procedures in a locked PDF that you can't edit yourself, don't pay for that. That's not right. They're your documents. They need to evolve over time. You should be able to edit them whenever you need to.
Yeah, you as a business, you have to be able to make those changes. And you think about how quickly things change, especially in a startup. You need to be able to say, no, our process has changed, and have the person who's doing that process update what their documentation is without paying someone. You might want to have someone look it over, and that's okay, but you definitely should be able to make those changes on your own. You need a risk assessment. So a risk assessment is just something that says, here's the risk that our business, based on our model, could be used to launder money or finance terrorism, and here's all the stuff we're doing to stop that from happening. So if something's particularly high risk, like if you're looking at it and saying this activity is high risk for money laundering and terrorist financing, then you need to have a control in place to stop that from happening.
And who does this risk assessment?
So every business that's regulated has to have one. We can always help with that. You can do it on your own as a business. FinTrack has really great guidance online for different industries. So they actually have some, not really model documents, but very, very detailed guidance about how to do this process. And I think that's very helpful in that regard. You have to have training, so all of your staff have to be trained. And it talks about that happening on an ongoing basis, which generally means about once a year. You also have to have a training plan. So it's not enough just to be backwards looking. You have to look at it and say, we will train our staff once a year. Here's what our plan to get that done looks like. And the last piece I talked about a little bit in our intro, so an AML compliance effectiveness review. So that's like an audit, but for compliance. It has to look at the entirety of your training or your compliance program, and then what you're actually doing operationally. So it has to consider all of these elements and then do samples of what you're actually doing, look at those. Did you follow the law? Did you follow your own policies and procedures? And how successful were you in doing those things?
Does it have to be done externally or internally?
No, so it has to be done every 2 years. You can do it internally, and if you have a bigger company and you have an internal audit function, then absolutely it can be done by internal audit. If you're a smaller company, it can technically be done by someone within your compliance group, but before you do that, I would just check with your banking partner to make sure that they're okay with that. Oftentimes, the banks do require that it be an external as opposed to an internal review that's completed.
For a similar reason that we don't do reviews for companies we draft documents for, because then we would reviewing our own work, which is kind of a conflict.
Yeah, they really want to see that independence there. We talked a little bit about FinTrack's registration process. Like I said, it's super simple. It's super straightforward. The other thing that we've learned recently is there are actually scams. So there's emails going out and they have FinTrack's logo on them, and they're saying, pay like $500 to register here. Don't pay that. That's a scam. To register on FinTrack's site, it's free. There is separate provincial legislation in Quebec, so there's a different license if you're doing business in Quebec with the Autorité des marchés financiers. I'm sorry, there's no translation of the name. I'm not just being pretentious. And the AMF for short. So with the AMF, there is a licensing fee, but that's paid directly to the AMF. So if anyone else is kind of acting like they might be collecting fees on behalf of one of these government agencies, please don't pay it. And the other bit to know about that is once you're successfully registered with FinTrack, it doesn't mean they've approved you. So please don't put a big starburst graphic on your website that says approved by FinTrack. All it means is that you've completed the registration process. So they're not endorsing you. They're not approving in any way other than just saying now you're registered. That's relatively important, and people can sometimes be surprised by that because they want to say like, but we have this registration. Fine to say that you have a registration. Fine to give your registration number. It's on a public registry, so it's verifiable. But don't imply something that's not true in terms of the way that you're talking about that.
So it's not an approval process. You don't need to get approved, or you just notify FinTrack that I'm doing this kind of business.
Yeah, so this is going to seem really strange for anyone European that's watching this, because in most of the EU, as part of their process, the regulators will actually look at the policies and procedures, they'll look at the risk assessment, they'll do sort of a pre-exam, pre-audit before they grant you your registration or your licensing, and that's not true here. All the registration means is that you've filled out a form, you've been successful in filling out the form, when you filled out the form, you ticked off that your business was doing an activity that really is an MSB activity in Canada, and there were no errors found in your form. That's what the registration process means. No one has reviewed your compliance program. No one has examined you. You've just done a registration.
That's interesting. So basically, I can be a MSB by the end of this evening if I fill out the form online.
You could pre-register.
You could pre-register this evening. So the way that process works is that when you do the pre-registration, FinTrack would call you and they would say, hey, here's what it says in your form. You've checked an activity. This is really what you're doing. Okay, great. And then they give you information to log in so that you can complete the full form. Once you've completed the full form, as long as everything is it's complete, it's filled out, it makes sense, you're not putting like Mickey Mouse in the name fields or something ridiculous, then that gets approved. It goes through FinTrack's approval process, which again does not involve checking your policies and procedures or anything like that. You don't even submit those as part of this process. They're really just looking at the form, and you're usually done within 2 weeks. So it's a fast process. So yeah, it wouldn't be tonight, but it would be close. Yeah, within the next couple of weeks for sure.
So the original authentic piece that we were covering before talked about customer identification. This is where the threshold that you're required by according to the legislation to identify your customers. The bank may say that you should do more. And if the transaction, so there's a requirement to attempt where possible to identify a person you believe is conducting a suspicious transaction. There is no dollar threshold for that. So if someone comes in as like, man, I just sold all these illegal guns online. Now I got to get rid of this cash. But I only sold one, and it's only $400. You still have to attempt to identify that person. There's no lower, which is different in the U.S. In the U.S., the transaction has to be at least $2,000 in order for that to be considered a suspicious transaction. So you're going to have the identification methods used that we were discussing before, with the now change to authentic instead of original, which makes doing online business much possible. Where before it was really difficult. We can't go into too much detail of what exactly that means right at this point, just because there is no guidance from FinTrack. So they will write the legislation. Or Department of Finance in Canada will write the legislation, then FinTrack will review it and interpret it and tell you what they think it means, and that's how it gets applied.
And it says $1,000 Canadian. So above 1,000.
Yeah, 1,000 or more identification is required. So in certain businesses, I think at a lot of BTMs right now, there's different thresholds in terms of when you have to actually do another step or when you can just do an SMS verification. So those are the types of things where if it's above that threshold, then there's certain things that have to apply in Canada.
Is it per day, per week?
Per transaction.
Per transaction.
So I can continue doing this $900 transactions indefinitely?
Yeah, so here's the funny thing about that, and Rodney went into that a little bit, where if it's suspicious, right, then it doesn't matter what the dollar threshold is. You have to attempt to identify. So if I'm going and doing $900, $900, $900, that very quickly looks like I'm just trying to avoid a threshold, and that becomes suspicious.
And there's certain indicators that FinTrack has provided that talk about if these things are occurring, they may lead to suspicion. And one of them being purposely structuring your transactions to avoid identification. You combine that with somebody, doing multiple transactions one over another, or if it's face-to-face being, dodgy when you try to ask them questions about stuff like that, then that could lead to the suspicious transaction report. So it gets really hard to kind of defend that if FinTrack were to come in and look and see those transactions and ask you why you didn't consider that suspicious. That gets really hard to answer.
Yeah, and I mean, from the identification and KYC perspective, you don't have to like identification. You don't have to like KYC. You don't have to think it's a good thing. But if you're running a business and you want to stay in business, then these are things that you need to think about in the Canadian context. And I'm not offended if you don't like KYC. I didn't write the laws. I don't think that they're perfect, but they're what we have to work with today.
And to clarify, that's a regulated business, so there are specific industries within the legislation that are regulated, not your T-shirt company would not have to ID every single person.
Sorry, however, we have a buy in bulk.
Can you grab the mic, please?
Yeah. There's a segment that buy in bulk, so any company could buy 300 t-shirts for their employees.
Okay.
That would be over $1,000. But that we'll never do that online. Like it's a different process.
Right, and it would be okay if you did. So even if, as part of your website, you had pricing that automatically adjusted and showed bulk discounts, that's fine too. Because again, you're not selling Bitcoin, you're selling T-shirts. Mm-hmm. So you would still not be covered even if you did that.
Perfect.
No problem. And keep those coming because I think those are important. I know that a lot of businesses have trepidation about, if we accept payment in Bitcoin, do we get pulled into this whole world? And it's really like accepting any other form of payment. In the fiat analog, as Outlier, if I accept payment in US dollars, that doesn't make me a money service business unless I then turn around and go and advertise and say, hey, I have US dollars to sell. I'd like Canadian dollars, right? If I just take those US dollars to my bank or to, whatever, my payment processor and exchange them for Canadian dollars, that's fine. It doesn't pull me into a regulated world.
And just for additional clarity, that goes into, say, being a reseller of Trezors or something like that. So even though that is a crypto wallet, you're not selling it loaded. So it comes empty, it becomes your private keys, and that's your wallet. I'm just selling you the device to hold your own crypto.
So just to clarify, for that particular example, if he were to pay his suppliers with crypto,
Mm-hmm.
is there a problem with that?
No.
And I will pay them with fiat.
I thought you're like, I'm keeping my Bitcoin. I will pay
So
you fiat.
it's only when you exchange money.
Yeah,
Cryptocurrencies. And back
it's
and
really
other
doing those
financial-
exchange transactions. So if you're paying a supplier, like you have Bitcoin on your balance sheet and you're paying a supplier in Bitcoin, that's fine. Do work that out with your accountant in advance. So I would say right now the biggest headache that we have, and I love our accountants, they're fantastic. They've been dealing with Bitcoin for a long time as well. But the hardest, most manual processes are always pricing out the transactions that we do in Bitcoin, regardless of what it is. So we have a Casa node that we run as a company, and we bought our node with Bitcoin, right? So when that happens, we've got to go, okay, so this was the fiat price for Bitcoin on the day that we bought it, and this is how much Bitcoin, and this is what it was for, and we have to send that to our accountants so that they can adjust our balance sheet accordingly. So just, be aware of that and make sure that you're capturing that as part of your accounting processes. But no, it doesn't make you an MSB from an AML perspective.
Which was also fun loading the Satoshis onto the Lightning node to open up a few channels that works out to pennies, basically. That was a lot of fun, too.
Yeah. Any of those, any of those transactions we just have to track from a company perspective. In terms of reporting to FinTrack, I think we've covered most of these already, so I'm not going to dwell here a long time. But there are certain types of transactions that will be reportable for regulated entities right away. And then the large virtual currency transactions, so exchanges of $10,000 or more, become reportable in 2021. So initially, it will just be the same types of transactions that MSBs are reporting today. So your suspicious, your large cash, and then your electronic fund transfers. And those are always transactions that you're doing on behalf of a client. So whenever it talks about these transactions being reportable, it's stuff that you're doing on behalf of a client. It's not things that you're doing for your own settlements and balances as a company. So when you pay your supplier and you're paying your supplier, you don't report on that because you're not doing it on behalf of a client. Go ahead.
I want to cover this one. This one's my favorite because if you discover that you are holding terrorist funds, you have to report that to FINTRAC, CSIS, so the Canadian Security Intelligence Service, thank you, and the RCMP. And how we do that today in 2019 is through fax. So you would send a fax to an unclassified number that goes to a fax machine at the government, and you must do that as soon as possible or without delay. And that's how that reporting is handled at this point. Do you have fax machines?
Not that I would like to publicly disclose, no.
Fair enough.
We have access to send faxes electronically. But,
So what do you do if you're in possession of the terrorist property?
So it's incredibly rare, by the way.
I can specify the question because I read what's the terms and conditions of Canadian exchanges.
Mm-hmm.
So they have a clause that if your Bitcoin is coming from, we believe, a criminal source, we're gonna seize it.
Freeze it and yeah. So with terrorist property specifically, there is an obligation to freeze that property. And this is if you know rather than suspect. So we have specific lists that are published that you would check against, and then if you see that an individual or a company is on that list, then you would freeze that property, and you would have to do the reporting. And at that point, the RCMP will sort of tell you what your next steps are. For the most part, those lists are public, and people and entities that know that they're on that list aren't doing business under that name. So it is relatively rare that you would have a terrorist property report. Most of the time, what you would have is a suspicious transaction report, because you wouldn't know for sure that it was that person or that entity, but you would suspect that it might be related to terrorist financing. And then you would report it as being suspicious, as opposed to being definitely this is the case.
Do you know if there is a list of Bitcoin addresses that on that list, or some sort of blacklist of those addresses?
So quite recently, in some sanctions, they've started including Bitcoin addresses.
Yeah, the U.S. has 2.
Yeah, I've heard that one, but
Yeah, and that's OFAC.
Yeah.
I think that we'll start to see that more when investigations turn up, that there are specific addresses that are owned and controlled. But what's happening more commonly is that even without the government saying you must do this, exchanges keep their own lists. So exchanges and brokerages are keeping their own lists of things that we know are related to malware, to specific hacks. So whenever an exchange gets hacked, they know where those coins are transferred to. And so they'll actually reach out to other exchanges to say, here is the address of the hacker. If you see any transactions coming to your exchange from this address, please tell us. Here's our police contact. Please freeze that. And that's how they're working together to try to recover some of those funds. But they're also quite leery of funds that come from malware attacks and different things. So where an exchange is aware of that, they tend to be very proactive in terms of working with one another and working with law enforcement.
do you have
Yes.
questions?
Yeah, if they freeze a Bitcoin wallet, does that mean that they can't transact with that wallet at all in the world?
So this gets into a really interesting question, because you can't, from a just a strict technology perspective, you can't stop a transaction from happening on the Bitcoin network. So let's say that
From receiving.
Yeah. So you can't, you can't stop the transaction from happening, But if I'm an exchange and I receive funds from a blacklisted address, then depending on the reason that that address is blacklisted, I might freeze those funds. I might report it to a regulator. I might report it to law enforcement. So it really depends on what the circumstances are that are surrounding that particular instance. Nothing stops the transaction from happening on the network itself, but it limits the activities that I can do as a business when those funds come to me.
So the exchange, because you're sending your Bitcoin to an exchange, exchange cannot reject the transaction. They will receive your coins, and at that point, well, in normal circumstance, they would show up in your exchange account, which is already in their database and not Bitcoin blockchain. So they control your Bitcoins, like they have the private keys. And if they consider that they're coming from a criminal source, they may not just give it to you.
So technically, they don't freeze the Bitcoin wallet, but they freeze the account that associated with it.
And on the exchange itself, exactly.
Okay, so when it comes to the type of the transactions that are considered as terrorist, does that include just you receiving money or you being utilized in a transfer or a transaction that goes to a terrorist activity or a terrorist organization?
So I mean, it would depend on the specific facts and circumstances. In order to freeze something, you have to have possession of it, right?
I'm
But
not just talking about freezing, I'm talking about responsibility or liability for you to report that. An example, like, you heard about the Jacklets, or the person from Canada, Jihadi Jack, who went to ISIS and
Okay.
converted and do a lot of. So his family went into a big trouble for transferring some money to him because he was asking for money. He was there, he was in jail, and he had nothing. They just sent like $300 or something dollars. Of course, they get into trouble because that was considered as supporting a terrorist activity, and I don't remember through which bank or through which. I think it was a wire transfer. The wire transfer went into a few troubles because they didn't report that, and they like, how could we do that?
right,
We
and
didn't
and did
know
you
that-
know, or should you ought to have known?
Exactly. Now, of course, they were working with CSS and RCMP for all of this that, but there was that question like, how did you allow that to happen? I said, how could we know? Now, I could see scenarios like that in Bitcoin where you could be a mining company and you facilitate a transfer. So does that one of your responsibilities if something like that?
But in that
happens?
case, you have no ability to actually stop that transaction, right? You're doing your function in terms of the
but
network.
could that get you into trouble? Because as we saw, like they were not closed or something, but they were kind of blamed. Like, why would you allow this kind? It's like a suspicious place to go. But no, how could you know that? It's like it's one of the transactions that amongst thousands of transactions that happens a day.
Yeah, I mean, as far as mining goes, I don't think that this is something that miners need to be particularly concerned about at this stage of the game. That may change down the road, but that's not really where the focus is right now.
But mining companies are included with this legislation, right?
Not necessarily.
Because they sell and because they.
But they don't necessarily always sell to the public. So let's say I'm running a mining company.
Okay.
And I'm not hanging out a shingle that says I'm selling Bitcoin. I'm mining Bitcoin, I'm collecting my Bitcoin, but Alex is running a brokerage and Rodney is running an exchange, and I become their client. And I'm always just selling my Bitcoin to Rodney and Alex. You know, they're my guys. They take care of me. They hook me up with the fiat that I need. I hook them up with the Bitcoin they need for their liquidity. I'm not becoming an MSB in that context. I'm dealing with MSBs. I'm a client of MSBs, but I myself as a miner am not selling to the public. And I think that that's a route that a lot of miners are going to take. Even when I think of the mining companies that I know today, a lot of them have just chosen to deal with specific brokerages and exchanges and hook themselves up with good deals with them rather than dealing with all of the public and all of the sales directly.
So if you're a mining company and you say, I don't sell directly, then
I don't sell to
you're-
the public.
You're not included under this, and you don't have to report any of those because, it's-
Exactly. Now, I will say that anybody in Canada, so whether or not you're regulated, just as a human who's in Canada or a business who's in Canada, can report transactions. So if you as a minor you saw something,
Yeah, of course.
and you said, hey, I think this might be related to terrorism, and I'm
course.
choosing to voluntarily report it, you could do that, and you would have the same protection
course.
under the law. It's an online form that you fill out,
And from a
and
moral-
we can all do that, but you're not required to.
That's what I'm saying. From a moral point of view, if you notice, but you're not required.
Exactly.
to do
exactly.
that.
You're not
So-
required. You're not required to do that, but you're able to do that.
Thank you.
You're welcome. Jumping back to our regulated entities, in terms of detecting those reportables, so if you have to report transactions, you have to have a mechanism in place to detect it. So you have to have a way of figuring out, did something that I should have reported happen? And you have to be able to prove that you actually ran whatever that process is. You also have to be able to explain it. So if you're buying software to find your reportable transactions for you, it shouldn't just be a black box software that you're like, oh yeah, we're using this. We don't really know how it works or what rule sets it's using or how the AI works. I don't know. It's just there. You have to be able to provide an explanation of why it makes sense for your business.
When I was talking about information should be free, this is one of the most common areas where people will charge for these things. Look at that. Requesting a policy interpretation is free. So you can write into FinTrack and ask questions. Typically, they would be related to regulated activity. But if they're not, I don't know actually if they would
They
respond.
might
or
still
not.
answer them. It depends. They
They
might just say
probably-
it's not regulated. It's outside of our jurisdiction. But
Yeah. The process is usually that if you submit a request to them, they will call you on the phone and explain it to you. And if you want it in writing, then we'll provide it in writing. So if your question is,
if you're a regulated business, please always get it in writing.
yes,
Don't rely on a phone call and say, oh, we had a phone call 3 years ago and here's what we heard, so we relied on that. If it's something that you want in terms of this is how we're setting up our business process, get it in writing. Sorry to interrupt.
that's okay. Drive that point home. If you can't prove it in compliance, it never happened. So if you don't have that paper, you can't say, but you told me this thing 3 years ago. Doesn't matter. You can write this yourself. You can ask a consultant to help you. You could hire a lawyer to do it for you because confidentiality and client privilege and stuff like that. There's specific ways if you want to write this question. Try and provide them with as much background information of the research you've done beforehand and drill down to a yes or no. So here's what the law says, here's what your guidance says, here's what I think, am I correct? That's the best way to formulate that. It will make it simple for them, and that will speed the time frame up a lot.
I think that's good. Compliance is never perfect. So when I said that your documents should be changing over time, that's absolutely true. You should always be refining your program. And don't expect that you're going to get everything right all of the time. But do focus on trying to get as much of it as you can right. One of my really big compliance pet peeves is when people tell me, oh, but we've gone above and beyond. And sometimes what that means is we did something really good for fraud prevention, but we totally missed our AML target. I have never done an audit for anyone where it's been a perfect audit. There are very few times where FinTrack comes in and does an exam where they leave and say we found no deficiencies in this case. So really focus on getting the core stuff right. And if you feel like you've absolutely got all the core stuff right, then focus on going above and beyond. But certainly when you're first implementing a program, really focus on making sure that you understand what your requirements are and that you're tracking to those requirements. No one is giving you points for doing extra stuff. Do the stuff that you have to do first. Can I touch on that one? No?
Go ahead.
So for regulated entities, FinTrack can examine you anytime. They don't just show up at your office and knock on your door. They'll call you and say, hey, this is FinTrack. We'd like to come in and do an examination. If they're going to throw out a couple of dates, if you happen to be on vacation that day or it's your kid's birthday and you really don't want to be in the office, tell them that. They're not terrible monsters. They can move your exam dates, and the earlier in the process that you tell them, the better it is. After you agree on the phone with a date with them, they're going to send you a formal request for information. You usually have about 30 days to provide them with the initial pieces of information. Start on it right away. They're pretty detailed information requests. Check it, make sure you have everything they need. Call people and ask questions if you have questions. And the examiners themselves are really good. So if you're not sure what they're asking for, and I have seen some somewhat ambiguous requests, call them and ask them. If they're asking you for something that seems a little bit crazy when you look at it, so if you have really high volumes and they're like, oh, give us all of your transactions, regardless of the amount for the last 6 months, and that's millions of transactions, you probably want to call them and tell them, hey, this is millions of transactions. Is this really the thing that you want, or do you want to scale it back a little bit? And they'll respond to that. Take those requests seriously, though, and make sure that you're responding to them fully. The exam can happen either over the phone or in person, so the examiner will meet with you. They'll talk about, in the context of that exam, what their findings are. Everyone is nervous during an exam, so if you're worried about it, like, you can ask them in the context of an exam, hey, do you think there's a penalty associated with this? The vast majority of the time the answer is no. In particular with first examinations, the answer tends to be no. But when they tell you, here are the deficiencies, so here's what we found, you need to fix those things, fix it. And if they tell you, hey, strong hint, sometimes it even says it in the letter, we will probably come back to do a follow-up examination. What that means is they will probably come back to do another follow-up examination. And in that examination, if you did not fix the things they told you to fix the first time, there's a way higher chance of penalty. And we have, outside of the MSB industry, a penalty that I'm aware of where FinTrack came in and did a first exam, and there were no policies, procedures, anything, no risk assessment, no training, yada, yada, yada. And the person who ran the company was like, oh, we've been really busy, we just haven't done it. And FinTrack said, okay, here are your deficiencies, you need to put this program in place. We'll be coming back, most likely, to do a follow-up exam. And so he got that strong hint. FinTrack came back a year and a half later, and he had done none of those things. And he said, hey, we've still been really busy, we haven't really had time to do it. Penalty. And so in that case, you can really see where there were all of the opportunities to fix things, and it didn't happen. So the intent of FinTrack penalties is to encourage compliance. It's not to be punitive, it's not to put people out of business. But especially in the money service business world, because our relationships with banks can be very tenuous, that is one of the dangers, is that if you have a previous FinTrack penalty, and it's published on their website, then it becomes really difficult to maintain a relationship with a bank. And we all need that for our fiat on-off ramps. So that can be actually threatening to a business, so it's something that we certainly all want to avoid.
And for clarity, the MSB space, dealers in virtual currencies will be considered MSBs. They will apply the same rules, so we kind of get lumped into that same
So
area.
is it those examinations? Is it a regular thing for everyone, or they're just kind of random?
They're kind of random. It depends on a few different things. So what the risk is associated with your business. So I assume that pretty soon after June of 2020, they're going to start doing exams in the virtual currency space. And part of that is going to be just based on the risk of these businesses. Market share matters. So if you are Western Union in the traditional MSB space, you're probably having exams regularly. If you're RBC in the banking space, you're probably having exams pretty regularly. If you're a smaller business with less market share, it is going to be more random. For folks that are new to compliance, I just wanted to share a couple of tips. Part of it is just get out there and network with other compliance geeks. So go to events, meet people. There's specifically compliance events that happen. There's compliance certifications. Participate in your industry associations. So there's 3 of them that I wanted to mention here. There's the Canadian MSB Association, the Digital Chamber of Commerce for Canada, and the Alberta Blockchain Consortium that are all really awesome. When I mentioned that, I don't write legislation, I'm not hurt if you don't like legislation, I will get up on a soapbox and say that if you don't like legislation, instead of just complaining about the way that it's written, that you don't think is right for your business, get involved, submit comments, and some of the best ways to do that is actually through these associations. Whenever there's something that's changing from a legislative perspective, they're aware of it, they're asking their members for comments. So if you're not comfortable going to the Department of Finance and submitting your comments directly, all of these organizations will have processes that you can participate in. Especially if you're the compliance officer, so if you're in that position where you're like, hey, I'm a one-man show, I'm the CEO, I'm the chief bottle washer, and I'm the compliance officer, sign up for FinTrack's mailing list. That way, at least you'll see it when there's anything new that comes out in terms of guidance. And just, there's a lot of really good guidance and policy interpretations on the website. So there's a ton of information out there. And if there's something that you're not sure about, you can always check those spots for it.
And if FinTrack ever comes and visits you and asks, are you on our mailing list? And your answer is no, they put a lot of work into making sure that you have the opportunity to have that information. So the least you can do is look at it. And it's even easier than getting registered. And we already covered how simple that was.
FinTrack mailing list you could be on by the end of the night.
Yeah. You write to FinTrack and put subscribe in the subject line. That's it.
Yeah. So that's it for us. Our contact info is there, and at the end of the slide deck, which you're going to post for your members, we actually have all of our source material, links to a few additional resources and things like that that are helpful for people that are trying to figure out what they need to do from a compliance perspective.
So we have a couple of questions from online.
Cool.
So George is asking, so he's registered with the Canadian Exchange, provided KYC, didn't do any transactions, asked them to delete his data, and they refused. So what's the...
Yeah, George, I'm sorry about that. So regulated entities do have a requirement to keep information for 5 years, if it's information that they collected for AML purposes. One of the things that's probably worth asking, I'm also a privacy nerd, and I understand that there's tension between privacy and AML sometimes. So one of the things that may be worth asking, if they're saying that they can't delete the data now, is just what is their data retention policy? When do they delete the data if his account is inactive? Because they shouldn't be maintaining the information forever. The answer should never be we keep data for infinity. It should be data that you keep as long as it's useful from a privacy perspective.
And another one that's probably I can answer. So why cannot miners blacklist dirty Bitcoin addresses? So technically miners can. It's just the miners are anonymous and we don't know everyone. So and technically someone, if they're huge miners, they can have a policy not to include certain transactions in the block and censor it. But Bitcoin is, the architecture of Bitcoin is built in this way that that's censorship resistant. So if it doesn't go in this particular block, some miners, they decided not to include it inside. The next block, the other miner will include it. So it's not going to work on the level of miners. There's no mining association that covers everyone. That anyone can become a miner, technically.
Mm-hmm.
Yeah. Do you have questions? Yeah. Grab the mic, please.
First of all, thank you for this. It's really been very useful. I want to go back to a point when you said that you can use, if for threats and AML and all, you could use a third party, like a software or something. So, because, a lot of people do not have that, they cannot hire the team and do all of this thing. So let's say that I'm using one of those, like, let's say Windows Azure Automatic Threat Detection,
Right.
which runs their own AIs, runs their own tools and all things, and something bad happened. Who's responsible? Where's the liability? Is it me? Is it them? Is it shared liability? Because if I'm outsourcing that, I'm saying into my agreement or in my forms that I don't have the ability to monitor all those transactions. I'm giving it to this entity.
So there's two answers to that, and one of them I have to be really careful in terms of not accidentally giving legal advice. But from the FinTrack liability perspective, if you are the regulated entity, it is always your liability. The second part of it is probably worth talking to your contract lawyer about, which is to say that if I outsource a function to Rodney, and he's doing my monitoring for me, and he's just closing alerts and ignoring transactions that should be suspicious and not really doing his job, and I have a FinTrack exam and I get a penalty because of that, can I then turn around and sue him civilly? And that's really a question of, what's the law where you're operating? What does your contract say? Definitely, engage your lawyer on that one as part of your contracting process, as part of the questions that you're asking around that. But from FINTRAC's perspective, the regulated entity is always the one that's responsible.
Yeah, and the other result of that penalty is that it's going to be your company's name listed on FINTRAC's website as receiving a penalty, regardless of who that provider is, no, how big or small, it's going to be your name.
And this is a funny thing that happens in contracts. If you look at the fine print in a lot of contracts for your IT service providers, the contract that they give you will actually say they are not liable. And that you are liable for understanding your obligations and making sure that their product meets it. So there is some natural tension there. And just from that company oversight perspective, you have to know that when you're bringing on a company who's a third party, like, you really need to make sure that you're vetting them and making sure that they're doing the right stuff.
Yeah. And these lean back to that risk assessment where, like, the importance of that exercise directly correlates to this, because if you don't understand your risk, someone could come in and be like, we'll monitor all your transactions. Sweet deal. I don't have much risk anyways because I only do these particular things. But if something goes wrong, it's you. So you want to make sure that you understand exactly the processes that are in place, but at the same time, you want to understand where the risk lies. So you want to make sure that that program that you're implementing or that solution that you're implementing covers where your risk lies. That can be tricky sometimes because you don't really, like, especially for a new company, it's hard to figure out where your risk will lie in particular. But as you grow and as you continue to update that risk assessment, the next year when you look at it, wow, we thought our risk would all be here, but it's actually over here. Now we need to talk to our service provider and say, hey, can we cover this risk a little better? That's the nuts and bolts that you want to see kind of under the hood of whatever your solution is.
And take your vendors to task. So when you have an IT vendor that says, here's what we're doing, to make sure that they have someone on staff who is able to check it against your Canadian requirements.
Prove it.
I think that there's probably a few IT vendors that have nightmares about what are their conversations with us. Because we will get on the phone with our clients and with potential vendors. And when I look at the demo, I always say, number one, show me your Canadian demo. Have someone on the phone who's not a sales guy, who's going to explain to me in detail how you're meeting Canadian legislative requirements. And I'm really nice. I will give them a list of, here's the requirements that I need you to show me. But if someone gets on the phone after that and tries to show me, a US demo that has nothing to do with Canadian requirements, we're done.
Or ask a specific legislative question, like, how are you meeting this requirement in Canada? And you get a sales guy pitch to be like, well, our solution, and they just launch into the same diatribe that they've told everybody that uses their stuff.
Yeah, push for their technical compliance person who understands what's under the hood.
Yeah. And if, because as you said, most of them, for those softwares or companies, they say we're not liable, which is why I asked. Could you do, because it's a risk, as you said, could you, is there a way that you can ensure that if something like this happens and I get penalty, that's going to be covered by insurance, or is that?
Yeah, you hire a lawyer that's going to rewrite that contract language and get them to agree to it. But you want a lawyer that's on your side for that one, that's editing that contract language.
But this is insurable. I mean, like.
Can you get insurance?
On those penalties if it's the fault of the technical company that didn't do their job well.
Yeah. So I mean,
at least they would not have all this penalty on you.
Yeah. So there is errors and omissions insurance that a lot of different business types have. Like like we have it. I would certainly recommend it. But again, when you're buying that insurance, like, if that's a real concern for you, work closely with your insurance person to make sure that it's covered, right? You want to make sure that third-party activity is covered under your policy, and then you want to understand what your exclusions in your policy are. And you want to make sure that you're not negligent, right? So you can't just look at it and say, we have insurance, huzzah, we can just hire whatever absolutely garbage vendor that we should have known was garbage.
The other is you can't vet someone up front and show, have them show this beautiful solution to your problem and then never look at it again. Be like, it was so good then, it's obviously fine now. You want to, the bigger that risk, the more closely you want to look at that thing. And so monthly, quarterly, semi-annually, however you decide as a business you want to monitor that thing, that's equally as important as the upfront kind of overview that you look at the beginning.
I wanted to clarify who's going to be affected. So I have like exchanges, obviously, is going to be affected. Over-the-counter traders
OTC
going to be
desks,
affected.
yeah.
So local bitcoins probably too. If you kind of run business already, you advertise there.
Yeah, if that's your business, then yes, it would be covered.
Bitcoin ATMs. If
Yes.
you run one, you need to comply. Private investors are not going to be affected if you just buy and you sell later. So that's going to be fine. And it's interesting. Are you familiar with the?
That, I would say, if you were buying and investing on behalf of a group of people, then you would technically be selling to the public at that point.
Okay, yeah.
And
But
yeah,
if you
and maybe have some securities implications.
So
as
didn't
well,
want to get
depending
into
on what it
that
was.
side of it, yes.
Yeah,
but-
like if you're doing something like a fund,
Yeah.
then
Yeah,
you've
but
also got securities
privately,
things.
if I buy Bitcoin and then
And you're
plan
just
to
buying
sell
and
it in
holding
5
Bitcoin,
years, yeah.
you're fine.
Are you familiar with Rise Wallet? There's a Canadian company.
Yes.
They sell Bitcoin through gift cards. Like that's actually they're over there. They probably will be affected.
So when you buy a Rise wallet, it's a gift card that's preloaded with Bitcoin?
No, it's actually it
What's
has
it
a value
preloaded
of
with?
Canadian dollars, and then
Uh-huh.
at the moment when you redeem it, you receive Bitcoin.
Okay. So it depends for me there because I'm not intimately familiar with what's happening on the back end of that. So if I'm just selling a fiat gift card, and you can go redeem that for Bitcoin, the exchange is happening at the point that I'm redeeming for Bitcoin. So what's the company where I'm redeeming the gift card for Bitcoin?
That's the Rise Wallet, and then the vendors. It's just you can buy the gift card right here.
Right. So the vendor is just selling you the gift card, but it's when you go to make that exchange.
So probably the vendor is not affected, but
Yeah,
that's
I'm remiss to comment too much on that because I would have to do a little bit more of a deep dive into
And
what's
then
happening there technically.
I thought of another company. That's Buns. That's a local.
Yeah.
Are they regulated by this regulation or like it's they're kind of weird? Like I don't know if it's funds or virtual currency.
Yeah.
It's sold.
It's sold.
Are they selling it to the public? Like that's some of these like compliance questions get really nuanced, and it's hard to kind of give a clear definition. Back to the previous example, where she was talking about is in current traditional money services business land, you have a one office that has 5 different people that use their service, say at a grocery store or at a phone booth, like a telephone booth type of company, something like that, where you can send money to your homeland or something like that through one of their agents.
Mm-hmm.
That would be where kind of the vendor on the gift card side. That's where she was talking about traditionally. That's the agency model. How this works and how that fits into it, we would have to know more information. But that's as somebody selling the gift cards, that would be more on the agency model side.
Then
Yeah,
there
it
is
would
also
depend on the
another
model.
company that you can pay with your Bitcoin and get a gift card for certain like Amazon or something like that.
But they're selling gift cards, not Bitcoin.
Okay. Yeah. I guess I don't have any more questions. Oh, no, the last one. So how do you think it's going to affect the development of crypto industry in Canada and blockchain?
I think that we're going to see more institutional players. Whether or not you think that's a good thing or a bad thing, I think is an open question. But regulatory certainty, I think, attracts a certain type of company, a certain type of player to the market. It's probably better for bigger companies than for smaller companies. But I think that we've also seen tremendous innovation in really regulated markets, even in the traditional financial sector. So overall, I think that there will still be a lot of innovators in the space.
We, as she said during the opening, we've been working in the Bitcoin crypto space since 2013. The legislation that we covered isn't even in effect yet. It doesn't come into effect until June 2020. So we've been operating in this unregulated space, so to speak, where everybody's self-regulating themselves because they wanted something. Now that there's clear guidelines and clear legislation around all of this, I think that has to be good news for all of the people that have, dubbed this an unregulated space, because now there's a law that strictly says that you're regulated now if you do these types of things, where before the average person didn't know that most of the companies, obviously all the companies we've dealt with have voluntarily done this thing. So it's nice to have, taking out some of the guesswork of whether you're regulated or not. It's pretty clear at this point.
Yeah, I agree that the bigger players that don't deal with unregulated markets because of the high risks, they probably will move into the space and do something.
Yeah, I think it becomes more attractive at this point for your more institutional players, and ultimately, as a person who would love to see massive Bitcoin adoption, I think that's a good thing in a lot of ways.
All right, any more questions? Well, I guess we thank you
Thank you for having
the
us.
presentation. That was a very interesting talk, great presentation. And we're gonna wrap up and see you next Tuesday.